Market Day Report. Glad you're with us, and thank you for allowing us to be a part of your day. You know, behind me is a field of canola, so how about we start with canola futures? Good place to start. Look, they're moving in higher territory. That's canola, and since we're there, we'll just work our way through some of the other row crops like rice. The rice market ticking a little higher today. This is a market that's down 3 consecutive days. It's lost 8% of its value here in 2025. This market's been down for 2 consecutive sessions, though the gains for 2025 are 10%. And when you look at all the row crops, the gains in the oat market lead the entire sector. Now, I know it's not heavily traded, but again, just on bare numbers here, 10% gains for oats, and we're lower across the board. This is a market that hasn't gained anything this year, though we've seen a 4% week-over-week increase. December cotton up 70 at 68.82. I can't recall the last time we talked about cotton being above 70 cents. Hard red winter, 527 and a quarter. That's up 4 1/4 cents. Wheat in Chicago is trading a penny higher at 542 1/2. Soybean trade. Beans are in the red. The old crop still below $10, 10.05 1/2 on November. That's a penny and a half lower. And then the corn market, the old crop, that September is below $4. New crop December, 417. It's down a penny. And how do we break it down? Chris Swift is with Swift Trading here in studio with us. What do you make of what's happening here right now in the row crops?
Literally perfect growing weather, big acres in there for corn, but not nearly as big acres for the soybeans. And although soybeans look pretty good right now, August tends to be the turning point, either makes or breaks the soybeans. Corn's already tasseled. A lot of it is being made right now, and as good a weather as you could ask for. Maybe the rain hampers a little bit, but probably not. So I look at it next year. What is next year going to be like? We've pretty much got this year. Corn is in a little bit of a bear market. Beans are sideways. Wheat is sideways. What's going to break them lower or higher from here? And I keep looking at the acres number for soybeans and the demand and the usage of, and although I almost have to exclude meal because we're going to be crushing more beans for the oil than we will the meal, but we are seeing some aspect of quite a bit of the demand for the soybeans keep up. So we're going to have 4.5 million acres short this year. We're only about 30-40 cent premium to the November of 26 contract. I look at that market to try to buy acres out there. In order to buy acres, it needs to go up in price. And so I'm just not negative towards that 26 November soybean market, and I think there might be some opportunities out there since there's not much seemingly this year.
Yeah, 54 cents across the board on soy oil, and the meal contracts remain in the red. Meal is well, it's lost 11% of its value.
That's huge. You know, $300 was always a really relatively good price for meal. Now, well under that. You have to know that the poultry and pork production, people are just loving that. That's some of the lowest cost of gains in feeding meal that we've seen in a long time.
And this soy oil market, by the way, that's hard for me to say. It's up. It's been higher 3 consecutive sessions. And as far as gains, just looking at our ag group here and the commodities, and you throw this in with livestock or other row crops, soy oil has gained 35% year to date. But let's talk about a market that's gained 31% year to date. That's coming up in just a moment. Market Day Report continues in a moment. All right, so we were looking at how crops had performed year to date, and we mentioned as far as row crops, oats lead at 10% year-to-date gains. Now, soy oil, when you throw all of the commodities together, leads at 35% gains year-to-date. But when we get to the livestock sector, we've got one that's up 13%, one that's up 21%, and here's one that's up 31%. Let's find out which ones are which. How about live cattle first? Live cattle up $1.10 on the August at $220.50 now, up 75 on the October, trading $217.52. Look at that, 218s, through that April contract. Then over to the feeder market. By the way, that's been up 13%. Feeders have been up 21%. And 320.30 is where we trade the August, up 82. 60 higher on September at 320.17. And finally, the market that has settled lower for 3 consecutive sessions, but's gained 31% this year. August hogs, 103.57, up 35. Yeah, I started looking back at how many days in a row hogs have sold off. And really, when you look at the last week and a half or so, hogs have been under pressure.
They have, and really all they did is catch the basis. So the lean hog index is around 107.40 right now. So they just kind of sold off. They were carrying a large premium and just kind of sold off is about all they did, really.
Okay, now we've closed the border again to Mexico for feeders. Is that going to have an effect on our cattle prices?
Well, it's been having an impact ever since they shut them back down in November, and the jockeying back and forth of opening and reopening caused a lot of confusion. And when you think about getting geared up and get ready for product to come in, it takes quite a bit to be able to do that. And then all of a sudden you find out that product's not coming anymore. So it has been very disruptive in a lot of things, and to some extent has created a disproportionate advantage to those in the north that were never relying on those cattle to begin with. So everyone as a whole is short of inventory, but now the South is not only that same short of inventory, but the 3 to 5% that they would have gotten from Mexico, kind of making everybody want to, that's in theory, long the market. We want to keep that border shut because that's what's taking on. And then you've got the southern half of the United States that feeds cattle say, boy, we would really like to have that inventory in there. And last week, both sides kind of came publicly, you know, and stated one of them wants it shut, the other one wants it open, and here we are right in the middle of it.
Okay, and then we have the Brazilian issue where the tariffs could skyrocket over 70%. We utilize Brazilian beef for the lean side. Do we have enough cull cows that we can kind of make up for that?
No, probably not. But what you have done is you've begun to price the consumer out of it. We saw boxes drop off over $10 last week, and still the the packer had to pay tip-top price for inventory to bring it in. Now you're creating voids in there that have no way to be managed. There's not a futures contract for boxes, and a lot of those boxes are sold out front. Now they're sold out front at a cheaper price, and I'm having to fill that with higher priced cattle. So there's aspects to this that you can't manage, some of this risk that is evolving with the really unstable supply side there.
And really, you want to put that packer in an even tighter position. If we have to start grinding some of the higher quality cuts here.
Oh, but we're already doing that.
Yeah, we're in big trouble.
Yeah,
at that
we're already
point.
doing that. And it's all about the movement of the beef. Can we move that beef out there into the public at these levels? And right now, I don't think we've even seen the highs of the box beef market, or if we have, then we've got some significant voids that we're going to have to fill before you get any kind of normality back into the market.
And I said the packer, it's not just the packer side, that's also back to the grocery store level. So this is going to be interesting. Keep an eye on this ground beef market.
Right, we will. Thanks for the update, guys. Appreciate it.